Good morning, everyone. This is Marshall Gittler bringing you the morning comment for September 22nd. Well, monetary policy divergence is alive and well. Fed funds rate expectations moved slightly higher, and the dollar gained overnight as Fed speakers continued their exegesis of the FOMC statement. Atlanta Fed President Dennis Lockhart, who is a voting member of the FOMC, said it was a close call and that, quote, "the domestic economy appears to me to be ready for the beginning of normalization." Note that he mentioned the domestic economy, emphasizing the difference between what's happening in the U.S. and what's happening in emerging markets, particularly China. He argued that the decision to delay hiking was largely a matter of risk management and agreed with other members that October is a live meeting, that is, one that could change interest rates, or where they could change interest rates, although he questioned whether there would be enough new information by then to change people's minds. St. Louis Fed President James Bullard, who's not a voting member, was even more hawkish. He said he argued against keeping on hold and that he would have dissented if he could have. Now, the view from Europe, though, is quite to the contrary. The chief economist of the Bank of Italy, whose name I won't even try to pronounce, said it was important that the ECB not fall behind the curve in its efforts to revive the Eurozone economy, and that, quote, "it is crucial to avoid lower potential growth, igniting a deflationary spiral, and this falls fully in the mandate of the central banks." ECB President Executive Board member Peter Pryat repeated the ECB's mantra that the bank would, quote, "do what's necessary," unquote, if its inflation target is at risk, and that it would forcefully react. So, the famous monetary policy divergence between the two major central banks is alive and well, contrary to what people may have thought after the FOMC statement, and that should at least keep Eurodollar in its current range for now, if not trending lower. Let's wait to hear what ECB President Draghi has to say tomorrow at a quarterly hearing before the Committee on Economic and Monetary Affairs of the European Parliament in Brussels. As for the indicators, not much on the schedule today. In the Eurozone, the preliminary consumer confidence index for July is the biggest thing, such as it is. In the U.S., too, only data of secondary importance, the Richmond Fed Manufacturing Index for September and the FHFA Housing Price Index for July are due out. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade delivered directly to you. You can also follow us on Twitter, like us on Facebook, or subscribe to our YouTube channel to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX Global, wishing you solid trading.